Welcome to WCrypto.
Hello, my friends. Welcome back to WCrypto. Bitcoin's liquidation heat map turned out to be a cheat map once again. We identified the hot pocket around 85,000 over the past days, and even the mysterious 40x whale closed his short position 2 days ago. Just today, Bitcoin did another classic Bitcoin move. Yesterday, I called its price action lackluster, and now it has completely ripped out of the 81,000 to 84,000 range, where it was stuck since the beginning of March. The breakout happened with full force, launching from yesterday's low of 81,800, all the way up by 6.78%, reaching a new high of 87,500. Right now, it is ranging around 85,800. During this move, $344.89 million in positions were liquidated. Longs lost $85.28 million, while shorts got absolutely wrecked, with $259.61 million wiped out. This entire rally was triggered by the FOMC meeting, where it was decided that quantitative tightening will end in April. This is very bullish for both traditional and crypto markets. The NDQ pumped up by 2.19%, the SPX gained 1.78%, and Bitcoin once again amplified the move with a massive 6.78% gain today. The official FOMC press release stated, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on Treasury securities from $25 billion to $5 billion. The interest rate decision remained unchanged at 4.5% as expected. The Federal Reserve is maintaining a cautious stance amid persistent economic uncertainty, especially with trade and fiscal policies under the administration. Markets currently expect 2 quarter-point rate cuts this year, with growing speculation of a potential third reduction. Looking at the charts, it's interesting how our blue-dotted horizontal lines continue to play out. During the breakout to 87,500, Bitcoin first struggled with the blue-dotted line at 84,600, getting rejected for 2 to 3 hours before breaking through with full momentum. It then reached the next blue-dotted levels at 86,200, 86,500. The only downside to this breakout is that on the 3-day liquidation heat map, the hottest levels are now below, still sitting at 80,000 and 81,000, as mentioned yesterday. Could we see a dip back down before another move up? Yes, but in my opinion, it's highly unlikely. The 1-month liquidation heat map also shows attractive levels around 79,000, 700, and 80,000. But above us, we have a warm liquidity cluster around 99,500 to 100,000, with 400 million at each step. That's an interesting target, with today's top at 87,500 and the subsequent red dot shift on the 1-hour wave trend chart, combined with an oversold RSI, I can see Bitcoin taking a breather around 85,500, possibly dipping to test the last horizontal line at 84,500 as support before continuing its move to the upside. Another interesting development today is the latest warning from the IMF regarding Bitcoin's role in national reserves. The IMF board has expressed concerns over adding more Bitcoin to the strategic reserve, citing volatility risks and potential economic instability. This raises an important debate. While traditional institutions continue to view Bitcoin as a threat to financial stability, the market itself keeps proving its resilience. Bitcoin's ability to withstand pressure and remain a high-performing asset could further challenge the old financial system's stance. Whether this warning will have any real impact remains to be seen, but it's another sign of the ongoing battle between decentralized assets and centralized control. I will keep you updated daily. Join the free Discord. Press the like button, click subscribe, and turn on notifications. And see you in the next one.